The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Friday night here in Asia and Friday morning in the States. And looks like the Fed may be coming to the rescue again. But who would have denied that was always a good possibility? And, I was thinking, is it the Fed's job to keep the stock market up? Is that in one of their charters somewhere? I mean, the market ticks down. I mean, what was it, 2 weeks ago? Maybe less than 2 weeks ago. Well, it was 2 weeks ago today, excuse me. 5.9% unemployment, so to speak, if you believe that or not. And it was all, hey, let's finish tapering. Let's put on a plan to start raising rates and everything. And the market goes down, and now the Fed is considering probably drastic measures again to keep the market up. Is that what their job is? I don't think so. So, that's just kind of a glaring issue that I have with, them creating wealth, so to speak. Are they really creating wealth? I mean, what is their actual MO here? And it's almost as if the whole plan of the Fed is centered around the U.S. stock market. And if it ticks down, it's just, the world's coming to an end. We haven't even had a customary pullback yet. So that's concerning in itself. And that's why I've been kind of harping on the concept that this may end extremely ugly at some point. Obviously not while they're sitting on the gas pedal on the buy bond program back and the keeping rates low plan. So anyway, that's the disgusting truth this morning. Housing starts at 8:30. We've also got at 8:30, Yellen, I believe, is speaking. She's not taking questions around the same time at an event. I think it's in Boston. So, again, she may blurb something out that could cause things to skyrocket again. But 9:55, we've got Michigan consumer sentiment numbers coming out, which is always something that's looked at. Last night, Asia, Japan, and China down. Or not last night, today, here in Asia. I forget where I'm at sometimes. China, we're going to look at the Shanghai Composite in just a little bit. But what we want to look at first is we want to look at Alibaba. And I've got a chart up here in the den, if you can see this. Yeah, I'm listening, Oda. It's disgusting. It's literally disgusting what the Fed's actual MO is here. And you got to wonder, how do these people get into, they, obviously have the credentials to get into the positions they're in, but, who's really pushing the buttons? I don't think the guys on TV, Steve Leisman, I listen to him sometimes. He's got a degree in English. Not saying that's a bad thing, but, a lot of these people that are giving their 2 cents on everything aren't usually credential heavy, and you would think that the people at the Fed are credential heavy, but are they allowed to use their credentials to make decisions? Who knows? Who knows what's going on? So as traders, we just kind of take that for what it's worth. And as we look at Alibaba, I remember Tom O'Brien was saying, and I wasn't even aware of this, September 19th, there it is. Alibaba came out on the 19th, and that was the highs of the market. So interesting little thing that he said about that, and that's quite amazing, actually. But right now, we don't have any profiles on Alibaba. Just to kind of continue on Alibaba just for a second here, we're going to take a look at what we have on the 240s and the inflection points if you're trying to trade this crazy stock that's all over the place, and you got to love that as a trader. It really, in my opinion, is probably not going to have a lot of market relevance beta correlation, if you will, at this stage. But 87.52, unfair highs on Alibaba, 84.55. That's the inflection points that I'm paying some serious attention to on this particular animal. So I'm kind of looking over to the den every once in a while and I'm liking what I'm seeing. Keep the comments coming, guys. And as we go through our normal morning regimen here, I'm going to take a look at a couple of things here. S&P's first and foremost. We talked about the breadth here staying negative. The breadth is still negative, and I'm not concerned about that. We want to look at this as the market opens, and we want to take a look at what our new statistics will be on the long term. Obviously, the short term's turned a little bit. The 240s are kind of really literally just getting into a balanced situation, to be honest with you. We'll take a look at the daily. We're around 9:30. If you're interested, I might throw those out to Steve if he's interested at all in knowing what those will be when the market opens. They'll convert a little bit. But let's take a look at the S&Ps. The weekly, guess what? Today's Friday. We do not have an orange bar sitting here. We may have an orange bar intraday on the week, but we've only got until the end of the day for this to possibly predict another profile. And what does that mean on a long-term basis? That means that our algorithm has not really decided that there's going to be a new balanced area down here, and therefore that's actually relatively bearish in itself, considering the activity and the volatility that we've had on the downside. All right, let's take a look at the daily. We do have this orange bar on the daily. That's predicting possibly, if this stays orange and doesn't sell off today, we may have, again, with the fundamental news out there, that somehow in 2 weeks, that's just unbelievable. In 2 weeks, from an unemployment rate of 5.9%, now we're converting completely into a whole nother mindset, supposedly. And obviously the market has gotten the benefit of that in the past, and they're looking in the same sense that, hey, we might benefit from it in the future. But again, the breadth statistics are relatively negative, and we may get a new profile on the daily, which would possibly predict another area that where we would build cause, as Tom actually instructed me the proper way to say that the other day. And 1871.50 is where we're at right now. So that's the long term. The intermediate term, the 240 situation. We had talked about 58 is that big number up there, and we kind of, the way I look at these things, when we talked about 58, we came off of 58 a couple of times the other day, and we come off it actually 3 times that general area, and it had some major pullbacks actually. But if we cross above that border and we kind of congregate, and then between 58 and these unfair highs on our 240, which is all we've got to look at, that's kind of a not a don't want to be there, I want to pull back kind of mechanism. So after we crossed 58, I kind of was sitting on the sidelines for a while. I'm not going long this thing. That's my MO for the S&Ps and the markets right now. So I'm kind of sitting tight and, waiting for some new information to appear. And we don't have anything really appearing on the daily yet. So again, if I'm going to trade the S&Ps, I'm going to use this particular area now, 1866, as the area I want to be concerned about to get back down below to start thinking about the short mechanism here. And that's actually without major inflection points to look at so far. Looking at the den a little bit there. You guys are good. Put out some really good information in there. Let's take a look at the NASDAQ really quick. Hadn't had the seemingly tremendous bounce as the S&Ps. Here's the situation on the daily. We do have a new profile attempting to appear. That's kind of a wait and see, just like the S&Ps. I'd like to see some major inflection points, and I'd like to be able to key off of those major inflection points for a long-term situation or intermediate situation. This is our 240s. I'm waiting for indicators to pop up here. They are not popping up. What's going on here? Let's see. Okay, here we go. There's no doubt about that, Odie. He's saying this because pumping liquidity in the markets causes longer-term inflation expectations to increase. That's a fact. It's called price fixing. Anyway, here's the inflection points to pay attention to on the NASDAQ. 38.27 up top and 37.06 down below. I know that's a huge range, but I'll be honest with you. You know, we've had a pretty good pullback. We've had a pretty good bounce. I'm personally waiting for some intermediate inflection points to appear here. Here's the situation on the DAX. Heck of a bounce here. Nothing attempting to appear down here on the DAX, though, so that's pretty damning for the longs on any kind of continuation. And we're not getting data yet on our 240s down the line, so we're going to keep gravitating down. I'm going to take a look at the Nikkei really quick. Nothing new on the Nikkei. We're not getting our short-term charts here. 14,690 is where we're at right now on the Nikkei futures. Michael, where's he at? Just letting you know, we're not getting intraday data on these on the short-term charts right now. We'll take a look at it on the break here. And this is actually in the Amazon cloud here, so there's something weird going on with these signals. We're getting it now. It's just a little delayed. Situation on, before we go to break here, just to kind of go through the usual suspects, let's take a look at the 10-year and the 30-year. And we talked the other day about, you know, the highs possibly of the market for a while, and that blow off that happened in the 30-year and the 10-year, and that was, what, Wednesday? So, again, I'm not a big fan of shorting these things. That would definitely be on a contra trade against a long-term trend north. But we do have a possible new daily box that will be appearing tomorrow or Monday. We've got an orange bar there, and that's going to be something we're just going to kind of wait and see. And I think that's what you have to do on these treasuries right now. Taking a look at the 30-year. Similar situation on the daily, and we're going to come back hopefully and let this load after the break and look at some shorter term numbers on the 30-year and the 10-year. But we've got the same situation there. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're taking a look at gold really quick. We talked about the 10-year and the 30-year, but we don't have anything really to key off of there because I can't. This is on the Amazon cloud up there, and I've got connection, and maybe eSignal's having a little bit of trouble with their intraday, real-time and historical intraday servers right now. So we're going to be reduced to looking at dailies and weeklies right now. We're going to cover as much as we can. This is gold. Again, maybe a new profile will appear Monday morning or today after the close with gold. We've got a little orange bar there, if you will. But I'm pretty bullish on gold since we closed above and came back and retested this 1227 with a little bit of noise factor, went down to 1222. This is kind of action you want to see here for a continuation. So, again, I think 1273 up that way is kind of the area I'm looking at for the next target up on gold with of course intermediate stops below 1227 again. We are getting some intraday information slowly coming in now. So, but again, it's trickling in, and that's not doing us any favors here to try to use some of the indicators that we have. So we're going to move forward. Silver still kind of in the balanced area, if you will, the bracketed area, as I call it sometimes, sitting right on the POC. This is like about as fair as you get because we've just been, this is a daily on silver. Remember, if you've watched some of our shows or looked at any of the videos that we do, this blue line is called the point of control, and it's also the mode, not the mean, the mode of this particular fair auction. So this is kind of where most of the price or volume has occurred in this particular fair auction, and we're just sitting right there. It's almost weird how that's working this way right now in silver. But again, we're talking about trading breakouts and closes above 1772.5 or below 1675, let's call it, if that makes sense on silver. Let me see if we got any shorter term stuff here yet. Nope. Gracious. Okay, we may try rebooting this in a bit here. I hadn't talked about this in a while. Wanted to kind of just flash these out there with the dollar coming in just a tad coming in. Soybeans, this is a daily situation here. And, this close above the profile, come back and retest. Obviously, the dollar's getting a little weaker, which is a little bit better for commodities in general, especially the ones priced in the U.S. 963.5 right now, approximately. And again, stops on this particular trade, in my opinion, need to be below 945 on November beans at this stage. Let's take a look at corn. I was a little concerned that corn might go below $3. We closed above, came back and retested, had some massive volatility, but we stayed above and we're kind of marching forward. So I'm not really trading this from the long side right now anymore until we see some new information appear. We had a new profile appear below that's bullish, as you know, if you watch these, if you follow some of the things that we do. So on corn, kind of waiting for some new information. Don't see any there. And taking a look at wheat before we go to the next break. Here's the situation on wheat. Had a much larger profile. It's a little bit better scenario than corn. It's a better technical fence, if you will, sitting up here at 511.5, 512. That's going to be also supportive of corn slightly, because these are alternative feed mechanisms along with meal in the bean world. So you got some support on wheat at around 511. This is the December contract, 511, 512, trading 518 right now. So if you are looking at corn to buy, you may want to look at wheat at this particular area right here and kind of calling it quits down below. I never thought wheat and corn would actually bounce like this. So I hope we get some new information. Wheat in general, in my opinion, and corn are going to ultimately come down. But right now, technically speaking, I don't think you can do anything on the short side yet. We're going to take a look at crude oil when we come back. That's bounced pretty radically, about $3 since we were looking at it. We'll be right back, folks.
Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to the powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have Easy Link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back. Got a little problem with our e-signal right now, so we're going to use the scanner here to pick out some things we're going to take a look at, hopefully when the chart's back up. I've got somebody working on that, and we got everything up here on the scanner, if you guys can see that. And just to make note of this, we added Hong Kong, Singapore, Malaysia, Shanghai, Mexico, Brazil, India, Nifty 50. We don't have the Sensex up here, and Colombia. And that has Peru and Chile mixed in there, cold cap. So, again, if you want to look at some things offshore, we've got all the quotes for it. They're real-time signals on these. But let's take a look at the NASDAQ 100. We looked at this the other day, and we wanted to look at dailies that were hanging in there. This is as of more than likely yesterday's close. We've got a couple more stocks in here. Costco is one of them that were 31 days above daily profiles. And we've got a couple others in here, but we're going to take a look at that the closer we get to the end of the show, because I think some dailies will be updated. Here's the situation on the S&P 500. If you're going to try to buy stocks on a relative strength basis, we're going to wait for this to load, and we're showing matching results only. A couple of names I'm going to throw out there until we get the charts back up. Is this the S&P 500? Let me just make sure it shows right. Yep, S&P 500 daily above the box. Okay. Wow. Take a look at something here. Okay, yep, we got 46 stocks trading above. So some of the names that I'm looking at, some of the things that have been showing: Fossil, FOSL, Tico Energy, Costco, of course, Whirlpool, showing some good turns here. And as we're waiting for E-signal to come up, excuse me, there, where are we at here? I'm going to go back to I'm going to deselect those. I'm going to take these filters off, clear the sorting. I'm going to go into our futures area. And we're going to look down at crude oil here, showing some signs and a new daily profile trying to appear. This is something that we're going to look at. The current profile is about 91 up top and 87, 69 down below. But we've got something trying to turn here, so when we get our charts back up, we'll take a look at it. As you can see, gold in the fair auction 62.40, but as you saw, we're attempting to get a new box appearing on gold, and the current top is 1227, as we have already talked about. It's just showing that pretty plain as day. How we doing, Michael? We're up. Okay, let me get our charts back. Be up in 2 seconds here. Is it reloading scanner and all that? Okay, cool. Thanks. Okay, I'm assuming we have our chart back in the den. Okay, thank you. Take a look at crude oil. Here's a situation on crude oil. I am baffled why we are not getting intraday data. Here we go. Okay, so crude oil, as we talked about from the scanner, you know, these inflection points, 87.69 on the bottom. We got a new box attempting to appear. That was kind of what I was really waiting for in crude oil. And we talked about, you know, this thing crowding down here at the bottom. And I was attempting personally to sell more crude oil down below with stops above that lower unfair low around 80.56. So we got down 79.78 and just went to the launching pad. But I was more interested personally in this thing going farther south. But that's the good news is these things are pretty easy to put stops around. Now we've broken, excuse me, broken stride on our 240s. Inflection points that I'm taking a look at are around 82 neighborhood. We're pretty far above there. So if you're going to trade crude oil on a short-term basis, you really don't have anything up here right now. Here's our 60s, same area, 82 down here on our 60-minute, as well as the 240 unfair highs right now. So, again, I think crude oil is kind of a wait and see, and we're waiting and seeing, hopefully, that we get a new profile on our daily, that hopefully we can regulate this down even farther, in my opinion, because the long-term trend on the weeklies and the dailies are still down. And when you're, you know, in a downtrend, you hope you have some violent moves up. Let everybody figure out the areas that they're going to pick, you know, swing the swords and battle in. But the good news is we got a new profile attempting to appear, and hopefully we can lean on that for something pretty cool in the future. Hopefully from the short side, trading from unfair highs down into unfair lows and even hopefully lower. A couple of things coming out this morning. Honeywell, there's some earnings coming out. I don't know if they've come out yet. Looks like they have. So we're trading 89.70, approximately 89.70. Is that 89.70? Yeah. So here's the situation on Honeywell. Here's the weekly view. Obviously, kind of had a high beta with the market there. And here's the situation. Yeah, I'm going to look at Google in a second. This is not reflective of the current price on the daily. The 240s are. So here's the 240 landscape on Honeywell. Unfair highs we just breached temporarily, 89.09. Don't know if I'm bullish or bearish on this really yet. I think I'd like to see the actual market open up. And I think since the high beta correlation with the market in general of Honeywell right now. We're going to probably just look at the S&Ps for guidance on this. And we're going to take a look at Google. They've got some earnings that probably have come out already. Excuse me. They missed. And it's rallying back. They missed yesterday. So this chart I was going to pull up in a second for today's earnings are GE, also General Electric. So here's the situation on Google. 542 unfair highs on our short-term 240s and 527, let's call it 528 down below. So these are the inflection points, in my opinion, to pay attention to if you're trying to trade Google. You know, we may rally a little bit farther. The market may bounce a little bit, but this is, in my opinion, the selling point for this, 542.60. And any breakdowns below 27, I think, are decent opportunities to sell this. Let's take a look at GE. As we look at General Electric, obviously, market or the people who are trading GE like what the news that came out this morning was, if it's out already. 25, what is that? 25.17 pre-market, that's where we're trading. The inflection points to pay attention to. New profile attempting to appear on the daily. This is why I'd want to wait till more than likely Monday morning to take a look at GE based on, again, we've got some more new powerful inflection points to look at in general. Let's go back and see if we got our bond short-term information that we can pull up here. I think this is going to work this time. Jesus. Come on. Come on, guys. Come on, E-Signal. Give me some data here. Have they got any news in their forum about this? Because this is on a, you know, a pretty big network. There's no, are they having problems? Okay. All right. Okay, sorry, guys. We cannot pull that up. So let's drill down to the currencies a little bit. Sorry. We almost had that, and then I was flipped away. Let me go back to the bonds here. I know. Okay. All right, well, let's give it about 5 more seconds. All right, we're going to switch gears here into currencies again. Okay. That's probably CME, CBT type problems that they're having because I'm getting information on the other one. So we're going to probably stay away from the CME now. Maybe it's not E-Signal. Okay. As we look at the euro, I've been relatively bearish on the euro, and they recently, what is it, the ECB and the BOE out of Great Britain, you know, they're giving some news that they're going to start a buyback program. So I don't know how long-lived this bounce is going to be in the euro itself. Here's 127.36, that number we talked about. We closed above and came back and retested. We're sitting here looking like we're going to go higher. But again, I'm not a big fan of going long the euro, so I'm opting out on longs on this product right now, as well as taking a look at the British pound. As we look at this on the daily, new box finally appeared here today. And this is kind of cool because we've got a neighborhood up here, a little bit of a lid on former unfair lows lining up pretty much at the same time with current unfair highs, and that would be 162.94. Wait, I'm sorry, 161.39 and 161.57. So that 18 pip DMZ, as I like to call them, in my opinion, may be something to lean on the short side on the British pound. I'm definitely looking at this not as a candidate to go higher. And as we traverse back to the dollar, which is a somewhat inverse relationship, more so to the euro than the British pound, we're going to talk a little bit about this and the ideas. This is the weekly situation on the dollar, and we should have a new profile appearing on the U.S. dollar by Monday morning. That'll give us some really good, for the first time in a long time. And the current profile started around the 1st of July. So having a new profile appear will be really nice on a long-term basis to try to regulate this a little bit better. Trading about 85 right now pre-market. Here's the daily situation, and if you've been watching this, I've been a fan of kind of looking at this in a consolidation manner within the last balanced area, this balanced area, opting out on shorts, trying to wait until we get back above into this balanced area with the close to try to look at this from the long side with stops below 85.40. Right now we're just kind of drifting around down here below this profile, and after that action yesterday and coming back down below, this is, it's not, in my opinion, it's not the time to buy the dollar until we get some confirmations back up north. And if you're going to be short the dollar, if you feel the other side of the coin with this, stops can be oriented back up in this balanced area, in my opinion. And if you're going to look at it that way, let it drift down and just see what happens. But here is kind of the thing that really is stopping me from wanting to really do anything major with the dollar, because we're going to have some really cool new inflection points to key off of Monday. And that's just the way that works. We've been looking at the ruble. Just want to kind of go back to this for a second. And as you've seen, we've been able to use these 240s to regulate this trade up. And right now, we've got a support area to stay with the long-term trend up at 40.73, unfair highs at 41.05 up top. So again, this may be an area, if you're looking to trade the ruble on the long side, staying with the trend, this is a short-term support area, in my opinion. And that's the way the ruble's looking right now. All right, let's just see it one more time if we can get the CME feed to work here. Go back to the 30-year, maybe not. Maybe not. Okay, as we're waiting for that, my goodness, we got it. Here we go. This is the 30-year 240 situation, 141. Let's see where this is. 141.17. That's maximum short-term support on that, and you got to, everything's got to say uncle below 140.24 on the 30-year right now. But remember, come Monday morning, we're more than likely going to have a new profile up here on the daily, which will be even stronger points. We're going to be right back, folks, for the last 5 minutes. Call in if you feel like calling in.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I'm showing you cotton, December cotton right now. Again, kind of looking at things that might be opportunities here. This is the unfair high 63.15, previous unfair high 63.40. You know, this looks relatively good to me. Again, you know where to say uncle below those, but again, this is something, you know, in the midst of the dollar climbing recently and now pulling back. I mean, I think this thing is showing that we've got a chance for some long opportunities with stops down below, of course, but this is kind of the Maginot line, if you will, this 63.15, 63.40 area for cotton. We come back and retest it once, kind of come down here again. Looks like it's basing a little bit here for a possible move up if you're looking at commodities in general. Take a look at coffee. A little bit right into the point of control here. 209.36. This is kind of the balance within the balance, if you will. Here's the situation on the weekly. Got back into the fair auction, so we're kind of in no man's land here on coffee. So we're gonna kind of lay off coffee. Cotton's a much better situation in my opinion, based on some of the technicals that we're looking at. Got about 2.5 minutes left here, so let's traverse back into the S&Ps. Not a lot's happened here, and I just want to restate that we do have, if you're joining us late here, we do have a profile that may be appearing after the close today based on this bar here. I'm still personally a little bearish on this based on the metrics that I'm looking at, even though it looks like, the Fed has come to the table again and said, changed their tune in the last 2 weeks and may provide the hand-holding situation that they have been customarily doing lately. And as we look across the board here, I want to look at Netflix. This is something that's obviously in the news. Some guys are trying to trade this. And let's see, we're trading pre-market 361, 20-something right now. Here's the situation on the daily. Before it sold off, it was having a little bit of a problem there. But, again, rallied pretty hard here from the bottom. But, we didn't have any information yesterday. We talked about waiting. Now you've got some inflection points on the short term, and I don't think you really need to do anything until you have, in my opinion, new profiles up here. Now we've had that short-term profile up here, and the highs 376.20, the lows 337.30. So those are kind of the wait till the market comes to you numbers. And I don't think, you can obviously throw some darts at a board here and trade some intraday volatility. Some people are really good at that. I've been good at it at times, but it seems to burn me without real decent support resistance areas. And I think you've got some around 376.20, 337.30 on Netflix. All right. Well, we got about 30 seconds left here. And just want to cover one more thing here that I wanted to look at. Facebook. This is something that I've personally solitarily only felt good about going long this particular instrument. We're trading 73.80 something right now. So these daily inflection points, we talked about waiting until we got back above there. And let me see what happened this morning here. Is this real? Oh, no. Okay. All right. So Facebook, I'm, of the stocks that I look at, this is one of the ones that using 72.65 there on the long side will stop down below. Guys, you've been great. Stay tuned for Steve Rhodes. He's awesome. Basil, David White, Daryl Martin, Andy Heck, Tom Brown, of course. The deck is stacked in your favor. We'll pick it up again Monday. Have a good weekend, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.